Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate mumbo jumbo. Today, we're diving into the annual report of Qualys, a cybersecurity company. This report is supposed to tell us how Qualys did last year, but honestly, sometimes these things feel like they're written to confuse you more than inform you. So we'll break it down in plain English. Were they hacked? Did they make money? Are they going to be around in a few years? Let's find out. Qualys helps companies protect their computer systems and data from cyber attacks. Think of them like the digital bodyguards for businesses. So, how did Qualys perform in this high-stakes world of cybersecurity? First up, let's talk about the elephant in the room, the risks. Qualys lists a ton of things that could go wrong. One big one is that their results can bounce around a lot each quarter and year. This is important because if they miss their numbers, investors might get spooked and the stock price could drop, similar to how Overstock crashed after it got bad press. Another risk is innovation. If Qualys doesn't keep up with the latest threats and create new security tools, they could lose out to competitors. It's like a chef who only knows how to cook one dish. Eventually, people will want something new. Of course, being a cybersecurity company means they're a target themselves. If Qualys gets hacked, it could seriously damage their reputation and future sales. It's kind of hard to sell security if you can't even secure your own house. That could result in lost customers. They also point out that their sales cycle can be really long and unpredictable because most big companies take a while to decide which security software to buy. This makes it hard to know how much money is coming in each quarter. And like every company, Qualys is worried about the economy since if businesses start cutting back on their IT security budgets, Qualys will be impacted. Qualys uses data centers around the world to deliver its services called shared cloud platforms, and any major issue at these facilities would be a headache because it would interrupt or delay their ability to deliver their solutions to their customers. And of course, competition is fierce. Qualys faces off against big names like CrowdStrike, Palo Alto Networks, and Rapid7, all competing for the same dollars, meaning Qualys needs to find a way to stand out. Now, shifting gears, it's worth noting that the financial statements in this report don't show any major error corrections or restatements from previous filings. This generally means the numbers we are seeing are solid and haven't been adjusted, although keep in mind that no error is always a plus. The report also talks about how the company is handling cybersecurity risks, and Qualys has security measures to monitor and protect their platform. They also engage third parties to review their cybersecurity protection status. Qualys has a whole system in place to figure out what kind of security threats they face, what's the worst that could happen, and how good their current defenses are. They say that they monitor all the safeguards and train their employees on the policies, with trainings to make employees aware of policies. They also have teams specifically for responding to security incidents, with plans of action which are trained periodically. It's like a fire drill, but for cyber attacks. Qualys also brings in outside experts to check their security measures and make sure they are following all the rules so they get constant attestation for the work they're doing. Moving on to the financial stuff, the report says Qualys operates in basically one business segment, so all the numbers we're seeing reflect their overall performance. The company uses consolidated net income to measure performance because that is what their chief executive officer uses. Now for the numbers, and it is good news because Qualys' revenue is up, reaching $607.6 million in 2024. The company's revenue grew due to an increase in demand for subscription services. One of the company's top strategy is to increase their suite of solutions by existing customers, and the company also want to bring on new customers. Part of the plan is constant innovation. The company want to constantly improve existing products and new solutions. Qualys' research and development expenses increased slightly to $111.9 million because it needs to make its IT systems better. The sales and marketing expenses were $128.3 million, so there has been an increase in sales and marketing initiatives. The company is trying to broaden the adoption of the cloud platform. Qualys values its employees and offers robust compensation packages including pay and benefits. They also have diversity and inclusion programs and community work. They seem like an ESG company. Qualys mentions that if they fail to maintain effective internal controls, they could even be delisted from the Nasdaq. That's a big deal because it means the business is in trouble. Qualys is making a play for government contracts since there is increasing sales of their solutions for government entities. Qualys products are subject to US export rules which could limit its ability to compete in foreign markets, but the company says it is fully compliant. There are some taxes that could cause issues as well as the ever-changing tax landscape of the US and the world, but overall their tax rate is relatively good. Looking at the cash flow statement, Qualys generated $244.1 million in cash from operating activities, which is good. It is like earning your own money instead of taking it from investors. Most of that cash was used for repurchasing company shares as they think their stock is a good investment. And Qualys warns investors that its stock price might go down. If they do not meet projections, expect the stock to tank. The company spends a lot of money repurchasing shares, but it also warns us that any share repurchases we make could affect the price of our common stock. Finally, Qualys has some anti-takeover provisions which basically make it harder for another company to buy them out or for investors to change the management. This may not always be good. So, what's my take on Qualys? Well, they are in the very important cybersecurity sector and they are growing their revenue and producing cash. Their main selling point is selling security, but that could also be their weakness since there are a lot of big firms out there. And we know Qualys is keeping up with cybersecurity threats thanks to outside audits and internal controls. So overall, they seem to be heading in a good direction, but they might encounter some headwind. Qualys is profitable. Adjusted EBITDA in 2024 accounted for 47% of all revenue. This suggests good financial management of their expenses, trading at around 30 times earnings. Qualys isn't exactly cheap based on past earnings, but the company's performance in the growing sector of cybersecurity suggests it is worth a premium. Taking all of this into account, my recommendation is a buy with a price target in the $145 to $155 range, as they might be able to increase revenue in the next few quarters. As always, do your own research before investing. If you liked that breakdown, please like, comment, and subscribe, and I'll see you on the next Corporate Decoder.